Hi, I'm Audie. Ever feel like the stock market is a game of big trades played with a tiny piggy bank? You have the ambition, but maybe not the capital. Today, we're changing that by showing you exactly how to trade options to grow a $1,000 account. Most beginners face what we call the Goliath problem. To buy 100 shares of a popular stock, you often need tens of thousands of dollars. It feels like an exclusive club where small accounts simply aren't allowed. The secret weapon is capital efficiency. You don't need a mountain of cash. You just need the right tools. Options allow you to control the price movement of 100 shares for a small fraction of the cost of buying the stock outright. We're going to dive into 3 specific strategies designed for a $1,000 account. Tool number 1 is the Iron Condor, also known as the safety net. This strategy is unique because you don't need a big market move to win. It actually works best when a stock stays chilling and trade sideways within a specific price range. Now, it is very important to keep in mind that the prices and premiums we're about to discuss are historical examples used for educational purposes only. They do not reflect current market prices. Let's look at a historical example with SPY at $442.24. You build a nest by selling an inner price range to collect cash, a $445 call, and a $441 put. This collects $680. To protect yourself from a sudden crash, you buy an outer range, a $446 call, and a $440 put. This acts as a protection toll that costs you $380. After that cost, you collect a net $300 in cash immediately. In this example, SPY stayed inside our nest and ended the day at $442.76. Because it stayed in range, the options expired worthless, allowing you to keep the $300 profit. This trade required a max risk of $700, fitting perfectly in our $1,000 piggy bank. That is 30% account growth in a single day, just for waiting. Tool number 2 is the call debit spread, or the discount ticket. This is for when you expect a stock to go up, but buying 100 shares is way too expensive. For example, 100 shares of Microsoft, MSFT, would historically cost $27,420. To slash that cost, we use a spread. In this June 2022 example, you think the stock will bounce. You buy a $295 call for $2,633. To help pay for it, you simultaneously sell a $320 call, the upper deck, to collect $1,677. This brings your net cost down to just $956. You've effectively slashed the entry price by over 60%. Fast forward 1 year later to June 2023. MSFT rallies to $348.10. By selling your long call and buying back the short call, your final profit after subtracting the original cost is $1,546. Your small account more than doubled on a single trade. Finally, we have LEAPs, our time capsule. These are long-term equity anticipation securities. These are options that don't expire for over a year, giving your trade plenty of time to grow without the stress of short-term price swings. Let's look at H&R Block, HRB, in January 2022. At $21.58 per share, 100 shares would cost you $2,158. Instead, you could buy a deep-in-the-money $15 LEAPS call for just $690. That is less than 1/3 the price of the stock. By January 2023, HRB rallied to $37.25. That LEAPS call is now worth $22.90, resulting in a $1,600 profit. A 230% return. Interestingly, buying the stock outright would have actually yielded a slightly lower profit of $1,567, but would have required you to take on 3 times more capital risk. Here is the Wall Street secret. These strategies aren't just for beginners. Professional options traders use these exact same tools every day to manage capital efficiently, reduce their risk, and maximize their total returns. To summarize your toolkit, the Iron Condor. Best for flat markets and steady income. The debit spread slashes the cost of bullish trades. Leaps replicates stock ownership for a fraction of the cost. Small accounts have big potential. You absolutely can trade options with a small account. Your $1,000 is enough to get started. Just remember to check current market prices before you trade, manage your risk, and start climbing. Just remember, options involve risk and aren't for everyone. So treat this as an educational guide for your financial journey. Investing in options trading involves significant risk and are not suitable for all investors. The strategies and concepts discussed are provided for educational and informational purposes only and do not constitute financial, investment, or tax advice. Before implementing any investment approach, it is essential to consult with a qualified financial professional to ensure it aligns with your specific risk tolerance and financial goals. Past performance is not indicative of future results, and market conditions can change rapidly.